Financial Planner. Follow us on YouTube.
Gold company, a company that everyone needs to check out if you haven't already. I know a lot of my listeners have been around since the days of Brazil Resources, Amir. But you, sir, have gained the recognition of the resource community, and you're accomplishing a lot of things, and you continue to deliver for investors. And we're going to hear about some of the updates today and what's going on. Amir Adnani, founder and chairman of Gold Mining, thanks for coming on the line with me today.
Hi, Kenneth. It's good to connect with you. It's been a busy week for us, but it's nice to connect with you. And we've been talking about this company since its early days when it was Brazil Resources, as you point out. So nice to continue to have your attention and coverage of the company. Yes,
it's been a journey along the way. And one thing I can certainly say is that you continue to deliver for us as investors, and it's really a pleasure to be able to partner with you. But before we get into the company, I've been watching the dollar, and a lot of implications with the dollar in relation to gold. Here in 2016, earlier this year, the dollar hit a high on the dollar index of around 103. It was 103. And now we're in the 91 range. It really has been collapsing. And below 91 on the dollar index, there's really not any support between there and 80. And I'd like to just get your thoughts on this, and if you think this will be something people should be looking at when it comes to gold investments.
It's a must, in my opinion. It's an absolute must because of what is happening across various sort of segments that we need to touch on. Number one, the U.S. dollar and what is happening with the Fed having really backed itself into a corner here with just the amount of debt that has been accumulated, Kenneth, the environment that we've had over the last decade of historically low interest rates. And we've seen this cause really frothy valuations in the stock market and in a variety of asset classes. There is definitely geopolitical issues that look concerning, and some of it just straight up scary. And the issues around what's happening fiscally in the United States, and whether we'll have some really scary episodes with the debt ceiling, with tax reforms, and there's some big events that need to sort themselves out. And the rate at which Congress has been going and its inability to get things done, I don't think inspires confidence in this being smooth sailing. And the way the broader market, not the gold market, but the broader equity market is priced in for perfection right now. Not even a single bump along the way has been factored in. And I tell you, I think it's going to be a bumpy ride. And for me, when I look at that, and Kenneth, it's not just you and I mean, Ray Dalio from the world's biggest hedge fund, and some of the other sort of big asset managers out there have come out and have been saying, you need to have 5 to 10% of your portfolio in gold, whether it's insurance or whether it's the pure counter-cyclical nature of being in gold right now. Gold prices are really cheap where they are right now compared to asset classes and compared to where they should be relative to the amount of monetary easing that has taken place in the world since 2009. So I believe it's an absolute must to be looking at gold as the ultimate store of value, as insurance. But also, when you talk about insurance, it sounds a bit boring, like the stuff you get just in case of something bad happening. Mm-hmm. I really see tremendous upside from here as well. So I think it plays a dual part role in what is about to unfold in the coming months and years with issues across the world and with the market and with issues in the U.S.
I totally agree with you. So we got the macro situation on our side. We got the cycle, the cyclical cycle of gold, and even the mining stocks. You could say that many are saying, hey, we're still in the early stages of this bull market here. I fully believe that. But you guys have managed to do some amazing things with gold mining. And you know what? I guess if you would, because not everyone that's listening to this is a shareholder, and maybe people are just learning about the company. I guess in a brief overview, and as a testament to all that you guys have been able to accomplish with the company, give us a little history on how far we've come with gold mining.
I'd love to do that. First of all, we have been at this now for 6 years as a public company. We IPO'd in summer of 2011, and it has been a tremendous journey over the last 6 years. This journey has coincided quite opportunistically with the downturn and the bear market that we've seen that started really since late 2012. So if you and I step back and look at the last 15 to 20 years of the Canadian stock market, where where it's a mainly resource-heavy market, so the TSX Venture Index, for example, over the last 15 to 20 years, it is truly a very cyclical market. And that's because the commodity business is a very cyclical market. And we have always believed that it would be the right strategy to make counter-cyclical strategies, basically to acquire assets, to acquire resource stage projects during a bear market. Well, timing worked out incredibly well in the sense that within a year from the IPO for our company, we started to see more and more breakdown in the market. And Kenneth, since late 2012, like you just said earlier, we have been in bear market territory for the TSX Venture Index and for commodity stocks. Yes, there has been recoveries and some bright spots here and there, including the positive move in gold and some other commodities last year. But no, we are nowhere near bull market territory or across from bear market into bull market as it pertains to the TSX Venture Index. So during this time frame, we have been very busy making acquisitions, making bear market acquisitions. And when you look at just the last 5 transactions we've done, and this doesn't include the one we've just recently announced, which is what prompted you and I to connect for this call. So not including the most recent deal, we've done over $60 million in acquisitions just in our last 5 transactions. And the same companies that we bought for $60 million in stock had market caps of over $800 million. They're so-called peak market caps, let's say, back in 2011 or 2012, before we got into this bear market for junior resources.
Wow.
You're talking about hundreds of thousands of meters of drilling that has happened. Collectively, between all the projects, there's probably over 400,000 meters of diamond drilling. The replacement value of just the drilling alone would be in the hundreds of millions of dollars. So it's a very sort of straightforward concept. It sounds straightforward, but this is seldom not a strategy deployed by junior resource companies. And also during a bear market, a lot of the bigger gold and precious metal companies tend to preserve cash. So they're not spending money getting bigger. They're not spending money exploring and developing their resources. So it kind of feeds on itself. During bear markets, there's no meaningful amount of new exploration taking place. Right now, the gold industry is sitting at a decade low when it comes to total gold resources in the ground. So the inventories have been drawn down and have been produced but not replaced and replenished. And we have been, again, as we point out, one of the very rare businesses or companies out there that has managed to be aggressive and execute. And in fact, even this year's not even over yet. We're now have completed our 3rd acquisition of a resource stage project. And that's by a margin way more than what any other company has done. No other junior company this year has completed 3 acquisitions. And these are all bear market acquisitions. So this really has been driving share price performance for us, Kenneth. You look at where we IPO'd in May of 2011 to now, our share price is up 160%. The TSX Venture is down 60%. So you have 6-year track record that demonstrates the acquisition model works. It works for growing a resource base without taking on too much exploration risk. It works for driving and creating shareholder value and driving share price performance. And now we're starting to get into that size where the total amount of gold resources that we have, 43-101 compliant, is clearly in the top 1% of any pre-production company in the Americas.
Amir, so how does a company, in general, you're talking about a bear market acquisition strategy. How does it transition when the bull market takes place, gold prices start rising? How does that transition take place? And, what are you expecting to happen?
A number of things. I mean, first of all, we've seen this, personally, I've seen this play out, and I've executed this kind of strategy with Uranium Energy. Now, with Uranium Energy, as you recall, and you've covered that company as well, we bought assets in 2010 when the uranium market back then was out of favor. And as the uranium prices turned around in late 2010, we were able to quickly transition and emerge by early 2011 as one of the newest uranium producers and achieve a strong market leadership. Of course, there were completely outside market factors that gave us headwinds there with the nuclear industry, but you can see how quickly it can turn around, and we've done that, and I've done that. Here, we also can look at other examples of companies in the silver business in the 90s, like Pan American Silver or Silver Standard, or Lumina Copper in the copper business in early 2000, where you buy these assets during a bear market for cents on the dollar, and when the market turns, you have options. You can develop them on your own, you can develop projects and take them into production, or you can joint venture them, or you can sell them and monetize these projects. So the uptrend creates more options and more value for a portfolio like this to be harvested, whereas the downturn is really, for us, singularly only one kind of a one-track mind, which is buy as much quality ounces as you can, buy them for less than what it costs to discover those ounces, eliminate exploration risk. And the day will come where the market has moved up sufficiently where those opportunities simply aren't there, and you start to then, as I mentioned, harvest these assets. And that, again, is not something unique to us. This model has been executed quite successfully in the resource business over the last couple of decades, and has given birth to multi-billion-dollar companies that have followed this discipline and this strategy very methodically. And Kenneth, it's very important to be disciplined with this strategy. And for us, that has been the key. And I think that's where the investor confidence in what we do has risen year in and year out, because year in and year out, we've executed on acquisitions.
Wow.
And year in and year out, we've increased the total gold resource base. And you really have to have that multi-year track record that starts to develop and to build the critical mass. And with every acquisition, our company has become stronger that much more.
Amir, you're a rock star in the mining, the resource community, and, many people know you, and you built a name for yourself. You're a successful entrepreneur. And I guess for people to get to know you on maybe a more personal level, how did you get involved in the mining sector?
Well, I appreciate your comment there. And, I'm first of all very focused on what I do, as you know, as an entrepreneur. I mean, the two companies that I have founded and I've been intimately involved with and running and building them since day one. One is 7 years old, and that's gold mining. And with Uranium Energy, that's a 12-year-old business now. And these are things that, you develop a reputation based on track record. And I think you can see with both companies, we've been very focused on executing on what the strategy is and not deviating from the strategy. You can't change the strategy every 6 months just to satisfy the whims of the market. But my background is very entrepreneurial. I mean, I'm first of all, academically, I have a Bachelor of Science degree from University of British Columbia in Vancouver. I'm proud to say I serve on the university's Alumni Association as a board member, so I'm very involved with the background there academically. But at the same time, being in Vancouver, you're in the epicenter of junior mining and resources. It's truly like being in the technology business and working and living in Palo Alto or something. So it's a great city and place to be. You can network and get to know some of the best and brightest minds. And I was very lucky and fortunate from early on to be able to combine my entrepreneurial interests with exceptional people that I was able to meet and partner up with to build uranium energy and gold mining. And so really it's about combining these elements. It's about combining the passion and drive for building a business, which what junior mining is all about, Kenneth. You've covered the sector long enough. I mean, there has to be the ability to take risk, but in a measured way, gather the human resources, gather the financial resources, find the right projects, and go and execute. And this is something that, again, takes partnership with the right people with varied skill sets. And you know, the skill set is key. I mean, you look at the team at gold mining. We have on our board a skill set ranging from Herb Dhaliwal, who was Canada's Minister of Natural Resources. So fully understanding the political side of things, the governmental relations side of things, having been a former Minister of Mines, to having people like Mario Garnero, who founded and runs the oldest investment house and one of the oldest banks in Brazil. He's invested $15 billion in Brazil and Latin America. So to have him as a board member, as a part of our team, as a 10% shareholder, to a strong technical team. You look at the CEO and president of gold mining, Paulo Pereira and Garnet Dawson, over 55 years of combined geologic experience with majors, with juniors, just between the two. So you look at those various elements. You look at our technical team with a handful of PhD geologists that we have on our technical team who are there with specialized expertise in the styles of mineralization and deposits and jurisdictions that we're involved in. It takes a long time to find the right people. It takes long time to partner with the right people. Those people have to have skin in the game. You know, our team and insiders in our company collectively own 25% of gold mining. That is thick skin, and that's what you want, right? In my opinion, you want to see, and for me, what I look for is really those elements of the right skill sets, covering all the bases for what it takes to build a successful company, complementary skill sets, but all those people collectively having thick skin in the game, and that's that's a formula that I really believe in, and we have that formula in UEC at Uranium Energy, and we have had that formula at gold mining since day one.
Well, you know, in the email I sent out this morning alerting all of my followers, I called this opportunity that we have here a gift. And I truly believe that for myself. And I believe people are going to look back on this interview and this time and be glad when they take a position and everything continues to play out in the market, begins to realize all the value that you guys are pouring into gold mining. So if you could, Amir, please just leave us with some closing thoughts here before we close this interview.
Yeah, so I think I would say that the closing thoughts really are centered around the blocking and tackling that we continue to do, Kenneth. We have a strategy that basically we're executing to the teeth when the market continues to be sideways and a bit soft. That's the window for us to make acquisitions, and we've demonstrated that, again, just having announced our third acquisition of the year. And this is our sixth year of continuing to do this year in and year out, having taken full advantage of the last 5 or 6 years of a bear market, and a pretty brutal bear market in the resource and gold sectors, to build one of the largest gold resource portfolios in the Americas and the world right now for a pre-production company. Of course, this year we've seen the overall market with gold stocks pull back a bit relative to last year. So you look at where gold mining is today, Kenneth, we are probably half the share price we were at a year ago when we had just a great run last year. So it's pulled back nicely as an entry point. But we have arguably more than 40, increased our resources by greater than 40%. I mean, we've really added to the resources over the last 6 or 7 months. So despite a challenging gold market since President Trump's victory, we've seen gold come off surprisingly. Despite that, we've actually increased the value of the company. The fundamental value, the intrinsic value is substantially greater today, despite the fact that the share price is lower compared to a year ago. We have over $16 million of cash, no debt, fully funded for what we're doing now for the foreseeable future for the next 2 to 3 years, and that's a really good position to be in for a junior resource company and junior gold company with our position and portfolio. So those are really my thoughts. I mean, I think this is we continue executing and stick to our knitting, and appreciate the opportunity to share these thoughts and updates with your audience. And hopefully we'll have obviously more news to come before the end of this year, because these acquisitions we've made just this week and also the acquisition we made in late July, we have new 43-101 resource reports coming out with those acquisitions, Kenneth. So there'll be more news between now and the end of the year. We're looking at an uplisting to the TSX, so the bigger exchange in Canada from the TSX Venture. That should further increase our liquidity and profile. And that's so it should be a busy sort of few months before the end of the year for the company as well.
Certainly, and this future definitely looks bright. A very timely update today. Thanks, Amir Adnani, for coming on the show with me today.
Thanks for having me, Kenneth.